Welcome back to another episode of Millennial Gems. I am your host KILLA, and today I want to give you guys some basic investing rules. 10 to be exact. So, um, let's be honest. It's 2025. If you're not parking your money anywhere where it's making you more money, you're definitely hustling and living life backwards. If you're trying to create a life outside of your 9 to 5 where you can get away from your 9 to 5, then you need to make sure you're getting cash flow. You need to make sure you're investing your money. And especially if you have children, you definitely want to be investing for their future. So that way they can get rich and then they can pass that on to their children and, so on and so forth. But you gotta definitely understand like just basic investing rules. So if you aren't investing now, well, I can give you 10 rules right now that'll help you get started. New to investing, this would be perfect. You're already investing, probably just a little refresher course. So, I've been investing for about last 5 years now. And, I've definitely noticed like the difference in my accounts, the capital gains, the unrealized gain, the realized profits and stuff like that. Like, um, I'm definitely building like long term wealth for sure. So that way, should I have children, I can pass that money down to them. Um, but yeah. So, all right. So let's get into it. So the first rule, I would say is you need to be early and you need to be consistent. Or start early and be consistent. I actually kind of got the start early from Steve Harvey. I was watching a UIL episode with him. But definitely, yeah, you want to start early. You want to be consistent. Like I said, I've been investing the last 5 years. So, that was, not too long ago, 25 years old. I think, at the time, 26. And ever since then, I've been putting money into my IRA. I've been putting money into my portfolio. Um, yeah, I've just been parking my money in like different investments. Like I have money in Fanbase right now. Um, yeah, I got money in places where I'm looking to see a long term return on investment. You definitely want to just contribute like small amounts because it's gonna lead to compound interest. Now, what's compound interest is just every time you put money in, you're gonna see more and more and more, and it's just gonna build on that every time you add um, into that portfolio. So make sure you're definitely just putting in small amounts if you can, you know, as best as you can, as frequently as you can. Number two, invest in only what you can afford to leave alone. So you don't need to invest a whole lot. I mean, obviously, the more you invest, the further ahead you can get yourself. But don't feel like you had to put your entire port or into the market or into a portfolio. You don't need to invest your entire emergency fund, or like if you need money for bills, like don't put all of it in it. Just you don't have to put all your paycheck in there. You can, but just make sure you still got money, for like your expenses and stuff like that. Because when it comes to the stock market, the market does fluctuate, so you definitely need time to recover from short-term losses. So you just want to make sure you do have some cash in your account for, you know, should something happen, should an emergency happen. So only invest how much determine a number you're willing to invest that you're okay with losing and stick to that. And then as time as you make more money, you can put in more money. Number three, understand what you're investing in. Never, never, never park your money into things you know nothing about. See, I don't even have that many stocks in my portfolio. I mainly have, for those who actually understand what I'm talking about, I have Apple because I understand what they do. I have Nvidia because I know what they do. I have VTI, which is an index fund, which covers the total stock market. And then there's one more, but I can't think of it off the top of my head. But yeah, like, you don't want to invest in anything you don't know about. Make sure whatever you're putting money into, you understand what they do. Understand the company, understand the sector. You know how they make money, the long term outlook. Like, you want to make sure they're making money every year. Like they're not losing revenue, they're making revenue. Like, their revenue's getting better every year. So it's just like, there's just little things that you need to do to make sure you understand a company. So don't park your money into nothing you don't understand. Make sure you understand what you're investing in. All right, number 4, diversify your portfolio. Now, I've never been a put all my eggs in one basket. Now, I'm definitely a risk taker, don't get me wrong. Sometimes you're going to focus on one thing, you got to put all your eggs in one basket. But in this case, when it comes to your portfolio, you definitely want to try to diversify over time. So, you want to try to have, stocks. You can do bonds. You can put your money in real estate. You can find other asset classes to help, reduce the risk. But definitely want to kind of just have money parked in different places. Like I said, it's just help for diversification of your portfolio. All right, number 5, avoid emotional investing. Avoid emotional investing. So stick to your plan even when the market goes up and goes down. The market's always going to go up. So, of course, you're going to gain money, or sometimes the market will have its down days, be in a bearish market, and yeah, you're going to see your money in the red. So, fear and greed can cause a lot of poor decisions. So, never enter the market if you're higher on emotions, or if you're really low on emotions and stuff like that, because then it's it's gonna end up bad. Like, don't take emotions out of when it comes to investing. I had to learn that with like day trading and stuff like that. Like, never day trade when you're not feeling 100%, because then you're not investing with a clear mind. You're not focused. You're gonna just do revenge trading. You're just gonna start gambling, and you don't want to do that. So definitely avoid emotional investing. All right, number 6. Buy and hold quality investments. So, buy and hold, if you don't know, there's different ways of, playing the game of the stock market. You have buy and hold, you have day trading, swing trading, leap trading. Which those ones are, those are something like short term, like day trading, intraday trading. Like, these are like short term things versus like swing trading, which is like you're playing a little bit longer game. Then you have to buy and hold, which is, simply as it says, buy and hold. So, you want to definitely play the long game for sure. So you want to buy quality companies for long-term wins. Don't chase like short-term hypes, like how GameStop, like everybody was high on GameStop back in like 2020 when we saw that burst. You want to find good companies and let those investments grow over time. You can find things like growth stocks and just allow those, those companies there, you can invest early because there's not that much probably capital involved. And, over time, just watch those companies grow over time. So definitely buy and hold. I started off doing day trading, and then I kind of switched over to buy and hold for most of the time. I'm still buying and holding, but now I'm actually back to day trading as well. So yeah, buy and hold quality investments in companies. All right, next, you need to watch out for fees and taxes. If you're messing with like an account that has like high fees when you buy trades or sell trades, that's gonna eat at your returns. So, um, and then also, you also want to try to use, index funds, low sorry, low cost index funds or like ETFs, and then also understand like how capital gains tax works. Is like I said earlier, you're gonna have things like capital gains and stuff like that, where obviously you put money in and then you watch that money kind of to grow, because you will have to pay taxes on any money that you make in the market. So definitely be aware of like whatever investing platforms you're using, when it comes to like fees, and definitely understand like how stocks work with like taxes and stuff like that. Investments work with when it comes to taxes. All right, number 8, reinvest your dividends. So if you don't know, dividends are like a small reward for you investing in a company. So, not every company offers dividends, but if it does offer dividends, what I've been doing is I've been reinvesting the dividends back into the account so that it can continue to compound that way. So some people, they'll have like dividend stocks, and they'll definitely just collect the dividends and just elect to make money that way. But what I do is I turn on my reinvest dividends, and I just, whatever the dividend pays out every quarter, or every semi-quarterly, or if it's a monthly dividend, I just reinvest it so that way it can compound faster, compound my gains faster. And most brokers, they'll allow like automatic dividend reinvestment, which also known as DRIP. Okay. So number 9. All right. So number 9, you want to review and rebalance periodically. So you definitely want to, check your portfolio. You don't need to check your portfolio out every single day. Like, you don't need to do that. I would say, check it out maybe every quarter. You can do it even semi-annually or even annually. But your money, you definitely kind of just want to, it's more so like a kind of set, and it's almost like a set and forget. But again, you're kind of checking in on it. Like I said, just not so often. Like I said, you can check on it quarterly. That's what I do. I normally check mine quarterly. And then, you can also, adjust your target risk levels and your asset allocations. So yeah, if you want to start investing more money into it, definitely increase how much you're investing, and kind of just like I said, just constantly review and rebalance your portfolio, periodically. And then lastly, just keep learning. You need continuous learning. The market's gonna evolve, and so should you as an investor. Every day now, like I said, since I've been doing options trading, I've been reading a lot more articles when it comes to the stock market and stuff like that, because I'm really trying to understand, how to become a better investor. So, understanding what to look for, understanding how certain stocks move, how certain companies are making money, studying their balance sheets, making sure I understand what the company does. So, I'm always going to be reading books. I follow credible investors. I listen to podcasts like this. Millennial Gems, where we talk about entrepreneurship, we talk about business. You can dabble a little bit in investing, and you just want to kind of just stay updated, so that way you know how bad either the market may be, or if you're going to be seeing if good news is good for the market, so you'll start to see green a lot more. So those are the top 10 basic investing rules. Now, if you are a business owner, freelancer, trader, creator, content creator, anything like that of that sort of nature, and you need a bookkeeper, I will drop the link to my website in the show notes, www.millennialgemsbk.com. Schedule a consultation. We can have a little quick conversation about whether or not we are a good match for each other. I definitely want to be able to help all business owners of multiple industries. Just like I said, just kind of help take care of your bookkeeping. It's full service bookkeeping that I offer. So I just want to be able to allow business owners to not have to worry about running their business and doing their bookkeeping. I will do that, so that way, as a business owner, you can focus on growth and scaling your company. With that being said, I will see y'all on the next episode. Peace.